Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
There's not many times when you have a almost guaranteed trade as you have the playbook of the Federal Reserve in your pocket. So today we're going to look at how you can kind of get guaranteed money here. It's great.
Love it. All right. If you guys enjoy this kind of entertaining stock market content of two stupid guys trading stocks, by all means, give us a like, subscribe below. We'd love to have you along in this little venture of ours.
Two Stupid Guys Trade Stocks. All
The
right.
chart looks like the market these days.
What was that?
The chart in our little cartoon looks like the market these days.
So one thing, do you want to talk about how Burry brought up these TLT puts kind of a long time ago?
Yeah. Actually, it was a major position of his regarding treasuries. I think it was like last year or so, and he's slowly scaled back out of it. But basically, the whole idea is that bond prices and the interest rates are kind of inversely correlated there or related. So as the yields go up, the prices drop. So he had kind of a bearish bet against the prices of these yields. Of these bonds because the yields were at like record low. The yields have been slowly creeping up. You know, 10-year Treasury yield went from like 1.4% like last year. It's up to like 3.2%. I want to say now. It's been increasing over time. And the Federal Reserve, with their interest rate hikes plan, continues to increase rates. Therefore, it's likely to continue to go up.
Right.
Therefore, the prices go down.
TLT is the 20-year. I previously did this trade earlier. I had had about a year expiration. I bought it about 135. I sold at like 128, 122, 120, 113, or no, 118. I ended up getting about 100% return, which was dope. And then I was like, man, why did I sell? Why did I get rid of my puts? Because they don't expire for like another 7 months. And it seems weird to enter in at this time when they're already lower than they have been in like 5 years, which I'll show you. But like I said, we know the playbook. They have to keep doing the rates, so why not try it again, right?
Yeah. And we talked briefly about it, how traditionally you have to bring the Fed funds rate above CPI to break inflation, and they would have several percentage points left to go to get to that point. So there's a lot of juice left on the bone if that needs to happen.
Yeah,
the meat left on the bone, juice in the orange.
George. I was actually kind of criticized for this trade, like when I took it the first time, and this is my best trade of the year. So I had a legit 100% return, and I think I can get another one in 4 months. So we're gonna look at this again. But the Fed's move, this is when they just increase rates. Comes with inflation running at its fastest pace in more than 40 years. The Fed is really committed to hitting that 2% inflation. And then according to the dot plot of individual members' expectations, the Fed's benchmark will end the year at 3.4, which, where are we at right now?
We're at 1.5.
Yeah, we still got a lot to go, right?
Yeah.
The committee then sees it to 3.8 in 2023, okay? The strong motivator for me wanting to do this trade again, and I even double checked with Vinny. I'm like, hey man, I want to make sure I'm understanding this right, because it's like you're entering Apple as it's went up to like in like 2013. I'm like, nah, I still think it can go higher. So, which it did. We had these 0.75 and 0.5, a couple of increases, but our inflation actually still increased the highest it's been in 40 years, 8.6. So that's when I was like, why not do this again, right?
Yeah. It's definitely an interesting thought, but the only kind of caveat is you never want to get within like 2 months of your option expiring, so that way you don't have the value of the option being eroded away. But so as long as you're buying options that are far enough out, yeah, it's a reasonable thought.
Mine's 14 months. In June, there was a Reuters poll. Nearly 3/4 of economists, 67 of 91, expected another 75. I know I'm saying Reuters. That's how I say it. 75 basis point hike in July. That would put the federal Fed's rate at 2.25, 2.5-ish. And then if they deliver another 75 basis point interest hike in July, followed by half percentage point rise in September, they probably won't scale back to a 0.25 in November, according to the poll. There's varying opinions on this. Some people are saying it's just going to be 0.5, like 4 more times instead of 0.75 and a 0.25. Either way, everybody agrees this has to go higher, i.e., bonds have to drop. Yay for Dylan.
Yeah. I completely agree. It's they have to do something aggressive, and it really depends on what the CPI numbers come out looking like. You're going to be that guy refreshing at 8:30 a.m. on the Friday the CPI numbers come out, trying to see because that's really what's going to drive this trade is what those CPI numbers are like, because the Fed is going to be tied to dealing with those numbers, right? Like they're not going to have much of a choice. If the numbers are hot, they have to be aggressive.
Exactly, which I feel bad hoping for, but also want to make money. If we look over here, the last time, my goal for this trade is for TLT to be at about 100. We're at 113, 112 right now. The last time we hit 100 was end of 2014. Haven't been there since, right? Now, clearly, we're going up, and you can clearly see that this is oh wait, let me go back once. You can clearly see that we were way up here due to COVID because of all this crazy things that are happening. And we've been dropping fairly aggressively. This is a weekly chart. If you look at the daily chart,
injected.
Huh?
All the cash that was injected into the market, basically taking yields down to nothing.
Exactly.
That's why the massive spike there.
If you look at the daily chart, we've really been respecting this solid pink trend line here. So my goal was, now granted, if you zoom back, it did hit this 100-day moving average. These aren't like stocks. It don't really respond to these as much, so it's more direction. But I was trying to get into it as it was hitting up here. So I did buy $1,000 worth of options. I'm hoping to get to another $1,000. I kind of want it to go up to like 115. These are some possibilities, all right? So as you go up to the current price is selling for about $1,000 a put. So I bought a $103 put at $5, and I believe mine was just $5 because it was a little bit higher. Expiring June 2016. I'm sorry, June 16, 2023.
You need a time machine to exercise that put. Yeah, but that makes sense.
Yeah.
You got plenty of time for it. You can count on probably 3 or 4 federal rate hikes at a minimum. Like, I'm being extremely conservative with that number. So, like, yeah, I can see that trade working out for you. And you have a long time before the data starts to decay exponentially on you. So you'd have to get to like April maybe or so of next year. So,
and I don't plan on holding this past December, to be honest with you.
No.
I just wanted the extra leeway in case I needed it. I'd rather get less profit than have a negative trade, was the logic. On top of that, we've already hit 108, and then we bounced back up a little bit. So I just need another $5. We've gone from 120 to 108 in like 4 weeks. So this could be way too long of an expiration. But either way, I'm thinking to get about at least a 70% increase in this trade.
Nice. So you're putting that rubber stamp on it, the Dylan's guaranteed 70% free money trade?
I really only do it for this trade and Nikola, and I'm entering both again this week. So
I love it. And when things are working, you got to stick with them sometimes. That's how it goes.
It's like my old X trade that I haven't done in a very long time. But yeah, do you have any interest in this trade? You gonna do this one?
It's just not something I've actually touched. You might laugh. I don't even know if I told you this. I have 2 Burrys positions right now. One on Chevron CVX, and one on Boeing.
All right.
Know, right? Yeah. Well, oil prices have started to come down a little bit, and the oil stocks have kind of pulled back a little bit from their highs.
All right, fair enough. I would rather have the playbook known, so I want this trade. But I agree, Boeing has been an absolute disaster for like 2 years, so not bad. All right, guys. Huh? Then Vinny's on mute because his dog's barking. You guys have a great day.
Catch you in the next one.